All right, we're now recording. Welcome to SIMBA Business Bites for March of 2025. Today we are going to cover federal tax filing tips for small business owners. In just a moment, I'm going to share some slides. I won't be able to see you on the screen for the end. We will try to get you out of here in no more than 30 minutes. Feel free to eat in the background snack. It is our lunch hour. We do put all of our recordings on SIMBA's YouTube channel. And not just our business bite recordings, but almost all of our business trainings are saved on our YouTube channel. So we will be able to go back and watch, and we'll send you an email out a couple of days after the training with our video and with our slides, because there's usually live links in the slides. So you can review what you made and use it in the future. So I'm going to go ahead and share my screen and start our presentation. All right. I'm going to make this larger for everyone. Okay. So again, we are SIMBA, the Small Business or Spoken Independent Metro Business Alliance. We were founded almost exactly 7 years ago. We work in 11 to 13 Eastern Washington counties, but we're based in Spokane. Today's presentation is brought to you as part of our contract with the Small Business Resiliency Network as part of the Washington State Department of Commerce, who funds us to provide these kinds of trainings. So where are we going to go today? We're going to focus on federal tax filing for small businesses. We're going to cover general information and common tax deductions and other tips for small businesses who are sole proprietorships or LLCs, folks who are taxed as pass-through entities, whether you're an LLC as a pass-through, which is usual for individually owned LLCs, for folks who are taxed as an S-corp, or for LLCs taxed as partnerships. We are not covering C-corp filings. That's a different tax return. We are happy to refer you to an accountant or bookkeeper to help you with that. So just an overview for sole proprietors and LLCs and how taxes are filed. It's a big misconception that if you have an LLC especially, or a sole proprietorship, a DBA business, that you have to file a separate business tax return. There is no such thing as a business tax return. There's corporate tax returns for C-corps, but there's not a business tax return. So for sole proprietorships and these, you are going to file your taxes for your business on your individual tax return, which is that IRS form 1040 that we've all been filing all of our lives. Also, proprietorship income and LLC income and expenses are reported on Schedule C of your 1040. So if you've only ever had a job in the past, you have W-2 income, you've never been an independent contractor, you haven't ever filled out Schedule C. But if you're a business owner, you're a 1099 contractor, you're going to file Schedule C in addition to potentially filing for your wages. Because it's an individual tax return where you report your business income for the year, you need to file it no later than April 15th of 2025 this year. You can file for an automatic extension using IRS form 4868, and these are links to the IRS website with information and the forms. You can file those forms otherwise using tax software or accountants as well. If you file an extension, your tax return is not due till October 15th of 2025. However, technically your taxes are due. So if you don't pay your taxes that might have been due, if you owe money on your tax return, you will be penalized for late payments, even if you file that extension. So like I said, you're going to report all of your income on your individual tax return, including W-2 income if you have a day job, any 1099 income if you're doing work for some other folks not related to your business, and any small business income for sole proprietorships or LLCs. There are not separate forms for these kinds of things. And if you're married filing jointly and only one of you owns the business, you're still going to put all of your business income on the same 1040 tax return. You're not filing a different return for different types of income, like W-2 wage income or versus LLC income. Same tax return. Something that we hear from accountants we work with a lot is that they sometimes get people who come to them to file their quote business taxes, and they've already filed for their day job, their W-2. They don't get to file a new tax return. They have to amend your tax return, which can delay refunds. It can add penalties. So again, all of it is done on one form if you have a sole proprietorship or an LLC. And again, I can take questions on that at the end. Okay, so before you file, some tips to be ready. This is whether you're filing by yourself, filing with a bookkeeper or an accountant, or doing some kind of tax software. You want to have things together. So you need your total gross income for the prior year, 2024, without any deductions for expenses. So the total amount of money before any expenses were paid. That includes like bank fees. So the actual amount of money you should have received. You should separate your income by payment type. Credit card income is usually provided on a different form that you receive from your merchant processor. So you'll want to track your credit card income if you can. And again, just totals. You do not need to break it out. Just totals. You also want to have any 1099s you receive from your business from someone who hired your business. This is really common if you are, for example, a graphic designer and a business who's not in line, say SIMBA hires you to make a logo, we are going to issue you a 1099. So you want that because you're going to break out that kind of income separately. You're going to need your total expenses broken out by category. Again, just totals, not by month, total for the year. You're going to use this EIN or tax ID number if you have one for your business. If you have an LLC, you have to have. If you have a sole proprietorship, you don't have to have one, but you should have one. If you're claiming, oops, let me go backwards. If you're claiming mileage for your business, you need your mileage log. And what you'll need for the IRS is the total mileage, and we'll talk about mileage logs later. And any vehicle expenses, things like gas, oil changes, insurance, only if you're using your vehicle more than 50% for your business. If you use your vehicle less than 50% for your business, you're not claiming vehicle expenses. So how do you file? This, when I was putting this presentation together, I used a software site called Pixabay, where you can find free images. And I looked up accountants, and this is an image they gave me that was free on the internet. I would definitely hire this accountant. So you can file your taxes a number of ways. You can use IRS paper forms. It's the most complicated way of filing your taxes. You have to do the math. It is the least expensive. It's free or the cost of the stamp, but it's the slowest to process and errors. You can use tax software like Free Tax USA or TurboTax, FreshBooks, so many software options. In the past, I've been a business owner. I used to use, it is pretty expensive. I use Free Tax USA this year, which is free for federal filings. There's a cost if you have state filings. So if you have income to report in Idaho, for example, where they have income tax, you need to file a tax return. There is a fee for that. I actually just upgraded to do the kind of checked version of the software like would happen on TurboTax, and it was $8. So highly recommend it. Pretty easy to use if you've got all your ducks in a row. Obviously, the most expensive is hiring an accountant or bookkeeper. It is the least complicated for you. You know it's going to be accurate. It just is going to cost you some money. And accountants are very busy. So if you are looking to hire an accountant or bookkeeper, do that now or be ready to file an extension because that tax deadline. So what everyone wants to talk about is tax deductions. Usually presentations about this, I include the write-off clip from Schitt's Creek, but because this is a short presentation, it's not in here, but I highly recommend if you haven't seen it to go watch it. You can just Google write-off Schitt's Creek, and it is hilarious and it is wrong, but it leads into what can deduct as a business owner. So how a deduction works simply, and I know everyone in the room already knows, but this video is not just for everyone in the room, is it's an expense you pay for your business. So you've paid for it. That is deducted from the gross amount of income you earn for your business. And then the amount that you're taxed on for your business is the net amount of income. So if you made $10,000 last year in your business and you had $5,000 of expenses, you're taxed on $5,000. You're not taxed on $10,000. So deductions lower your tax burden federally. One little note, and I know I had a conversation with one of you in the room about this very recently. Think about how much you're deducting, especially if you're in a space in your business where you want to grow and you want to take on a loan. Because when you try to take a business loan on or a commercial loan, they're going to ask you for your tax returns. And they want to see that you have income to pay for your business. So if you've written off everything, so you have to pay less in federal taxes, it looks like on paper that your business is not making money. So no one is going to refund you. So, or sorry, no one is going to lend to you because it looks like you're not making money. So that's something to think about. Maybe not when you're starting out, when you're trying to save that money, but if you're looking for a loan to buy a piece of equipment or lease a larger office or buy a building, definitely think about minimizing some of the deductions. Just because you can take them doesn't mean you have to take them. But back on the most common types of business deductions. The first one is taxes and licenses, not your federal taxes, but yours for the state of Washington, your LLC formation fee or your annual filing fee. Any state business, that business and occupancy and sales tax you paid at the state of Washington, and it's a deduction for the year you paid it. So anything you paid in 2024 would go in your 2024 tax return. Any specialty licensing fees, if you're in construction or cosmetology, or you have a temporary food establishment, you need a special licensure, that license fee is deductible. Marketing and advertising. Obviously, that's print and online ads. We think about that all the time, but it's also domain registrations if you own the domain to your website. If you're using like a Google Suite Professional, that is usually considered marketing and advertising. It could be software. Your website, you're paying Squarespace sample for your website. Business cards, whether those are physical or digital. If you're paying for a verified account, anything that really fits to promote your business is there. Not paying a company to create a website, that's a contractor, different deduction. But again, marketing and advertising includes all these things. Legal and professional services, if you hire a bookkeeper or a lawyer for your business, those are deductible as well. And it has to be for your business only. So let's say you are getting divorced and you're fighting about the value of a family business, that is still not for your business. But if you are hiring a lawyer to review a contract for your business, or you're looking to add a business partner and you're negotiating, that would be a legal expense for your business that you can deduct. Rent and lease. So you can include a home office dedicated workspace in your home. I highly recommend you have a lease agreement. It's going to be with yourself and your business. We can give you some samples if you want to use that, just to keep for your records. But if you have a spare bedroom that sometimes you work in, but also you have guests in there and the pets are in there and other things, you cannot deduct it because it's not fully dedicated for the workspace. It can include specialty runoff rentals, like if you had to rent studio space, if you're a performer. And obviously the rent or lease for heated office space is a deduction. Office supplies and equipment, paper, pens, postage, folders, all those things that you need to run your office, tissue, whatever it is that runs your office, all of those things you're using for your business that are kind of consumable are deductible. It also includes equipment, computers, desks, printers, physical items. Some of these things you may appreciate. You'll want to do that with an accountant or a bookkeeper if they're expensive. So if you buy $1,000 computer, you may want to take the deduction over time. That's depreciating it. Versus if you buy a $250 Chromebook, you're probably just going to treat it as a piece of office supply or equipment. Again, question for an accountant, but just things to think about. Any software you're using to run your business, maybe that's Professional Now. Adobe is a common one. Email server, any software that you need to run your business, QuickBooks, is a deduction. Communication tools, cell phones, landlines, internet, cable. Those are things you can deduct. If you're using them at home, let's say it's your personal cell phone, but you also use it for business, you can deduct a portion of the amount you use for business. You should be able to back up the amount that is. You don't need to go through and highlight every call or text and guess how much time you spend on the internet promoting your business versus scrolling social media. But 50% is a good starting point. And again, that's for the full year if that's a private account. Obviously, if you have a cell phone that is just for your work, you're deducting the whole amount of those cell phone bills. Business travel expenses must be for business. Hotels and lodging, planes, Ubers, buses, meals during travel are deductible at 50%. You're going to want to track the full amount that you paid and then if you're using, for example, or Free Tax USA, they're gonna just deduct 50% of it. The presumption to eat anyway. Accountant will deduct it correctly for you, but have that total number. And if you can have these total numbers ready when you go see your accountant or bookkeeper, you're gonna save an incredible amount of money. Other things, office meals. So office meals are deductible at 100%. This is not a meal you eat at your office. This is not a meal you bring to your office. This is not a meal where you go out to lunch with your staff. This is a 100% deductible office meal for, like, if you had an in-house staff holiday party, ordered pizza for your staff. If you have regular office snacks that are just for the office. If your office is at home, it's really hard to claim office snacks being just for at home. This is more if you have a physical office. And if you provide meals on the premises for more than half of your employees. An example, I know a lot of big law firms in bigger cities that have their baby lawyers work really long hours. They often bring in a dinner for them. More than 50% of their employees are having them. They have a dinner in the break room or whatever. That's optional. That's a full deduction. But generally for small business owners, you're only getting deductions for meals during travel. Travel is not your commute to work. So your coffee in the morning is not a deduction for your business taxes. Materials cost. So materials used in retail. I know one of you in the room sells clothing. So the cost of the hoodies that you are selling, and the cost of the t-shirts, the cost of the materials you're using to create what you're selling, cost of goods sold. Also things like materials used in construction. So if you're a house builder or remodeler, you know, the cost of wood and nails and all the other things that go into that are a deduction for your business. Specialty tools or equipment. If you have construction equipment, and that could be manual things like hammers and screwdrivers, and it could be something like a backhoe. If you're a performer, musical instruments. If you are a hairdresser or stylist or barber, you have expensive shears. Sometimes they can be $500 for the scissors your hairstylist has. Blow dryers, things like that that are for work, you can deduct those specialty equipments. Association dues or membership dues. If you're a member of a psychiatry association or a specialty association of lawyers, or you're a member of SIMBA, that membership fee for that association is deductible on your taxes. Whether the association is a nonprofit or not, you can still deduct that business membership. Chambers of commerce, any union dues. If you're a construction worker and you also join a union as part of your work, everyone in your shop joins a union, you can deduct that. Continuing education and conference fees. If you are going to a conference or a continuing education, whether that's in person or online, or, you know, on-demand courses tied to your business to be better at doing your business, you can deduct the cost of that. Repairs to business real estate and personal property. Those are also things that you can deduct. So if you have a building that you own or mortgage for your business, you have to do some remodeling repairs, that's a deduction. If you have a printer, which is considered personal property of your business, and you need to repair it, you can also deduct that. Amounts you pay to employees and contractors, wages paid to your employees, payments to contractors. If you've paid any contractors more than $600 in the prior year, basically anyone doing work for you who's not an employee, you have to issue their 1099s by January 31st. If you do not, you are subject to penalties up to $300 per person you fail to file a 1099 for. Mortgages are deducted if you own your building and you're paying for it, and that would also include things like your building insurance and related items. Your bank charges and fees. So not just the charges and fees your business bank account is charging, but also merchant processing fees. If you're using like a Shopify or a Square payment processing system, fees taken on platforms like Venmo or PayPal. If you're selling things on a large marketplace like Etsy or Amazon, that's also a deduction. Clothing and costumes. There's a reason I put a ballerina on here. You can only deduct clothing or costumes if it's used for nothing other than your business. If your business is a professional dancer, you can deduct the cost of your tights and your point shoes and all the other things that you need. It can include the cost of tailoring, repairs, especially cleaning fees. You just deduct dry cleaning fees if you're a professional and you need to wear a suit to work. That is not something that the IRS considers that you can only wear. But you can't deduct that. That's just considered the cost of having that, because you could potentially wear a suit to another event. You're probably not wearing your tutu anywhere else. Other question mark, there's all kinds of things that are going to be unique to your business that you might need specifically. For example, if you're working markets and you have to pay a market fee, that's really kind of a rent and lease. You can pay for that. Something that might be considered office supplies, if you're doing retail, the cost of bags and tissue paper. If you're selling and shipping things, obviously the postage to ship, your boxes, unit for your business, that's probably a lease. If you have specialty supporting to get paid by insurance companies, those kinds of things. And insurance isn't listed in here, but it should. Any business insurance, both real, the insurance for your lease space or insurance for your business property. You can get business property insurance. If you have insurance like malpractice insurance, you're in a profession that requires that. Those are also things you can deduct. Again, if you're going to see an accountant or bookkeeper software, you just need the total numbers. You do have to keep the records, which is what I'm going to talk about in a moment, but you don't need to have these broken out, put them in categories. It's going to make your life a lot easier. You could certainly do your taxes of, I spent this amount on paper and this amount on pens and this amount on market fees. It's just better to have them in categories. It's a lot easier and faster. So like I mentioned, some record keeping best practices. For the state of Washington, if you own a business in Washington, the records of your business income and expenses must be maintained for 5 years. So it's 5 years from the date you earn the income or accrue. For the IRS, it is also 5 years. 5 years from the date you filed your tax return, so long as it's not a fraudulent filing. So what does that mean? That your tax returns on time or annually. So if you just filed your 2019 tax return, your 5 years starts from the date you filed. That's how long you need to keep your income and expense records. The part about fraudulent filing is kind of vague. It's the IRS rule. Basically, if you intentionally did something wrong on your taxes and you knew it, technically the IRS can go back more than 5 years. And again, it's 5 years from the date you filed, not from the date you accrued your expenses. So for 2024 expenses, if you file on April 15th, it's 5 years from April 15th for your 2024 income and expenses. How do you keep your business records? You can keep them in hard copy or digital, up to you. I recommend, if you can keep them digital and have them in 2 ways, that's the best practice. So maybe you have them in some kind of cloud-based storage system, but you also have it on a flash drive, something of that nature, just so you have backups. You don't have to keep hard copy receipts for the IRS. You have it for a long time. You need original receipts that are itemized. If you get audited by the IRS, they are not going to count just your credit card slip with your total amount as a valid expense. So always, always, always have itemized receipts. This applies for any kind of business. Invoices count. These canceled checks, just so you show you made payment to a contractor, for example. Any records reflecting ACH, it's going to be bank statements. Your bank will keep your canceled checks for you. It's always online. Lease tracks to show the amounts of your lease, which is why if you have a dedicated home office, you should go through the steps of making that lease, because that will also dictate how much you can deduct. Any account statements, so bank statements, credit card statements, phone bill statements, all those kinds of things. Now we show your expenses, insurance statements. Yes, they're always available online. Like, I don't know how far back, I have AT&T for my phone. I don't know how far back you can go, but I'm sure it's years. It's better to just download those for the year and keep them with your tax records for the year. Receipt books, if you're giving receipts for cash purchases and you're writing them out, pretty old school, but people still do it. Any 1099s you received and any 1099s you issued. If you have employees, there's some very specific rules about tax records that we can talk about with you offline. Oops, let's see if I can get this to advance. Mileage. So if you are claiming mileage for your business, any driving you do for your business, you must maintain a mileage log for each year you're claiming mileage. You have to save that mileage log for that 5-year period from the date you filed your taxes. So again, if you're filing your 2024 taxes and you file on April 5th, 2025, you need to keep those logs until April 15th, 2030. I was gonna say 2020, taking us back. What kind of mileage can you track? You cannot track the mileage for a commute. If you have a dedicated office, to and from your home to your office is a commute. It is not deductible, period. But any other driving you do for business purposes is. So obviously, if you're traveling to an event, if you're traveling to perform, if you're traveling to a market where you're setting up a booth, that's business mileage. It also includes things like trips to the post office. If you're going to the post office to ship something you've sold to someone, track that mileage. If you're driving to like a Staples to pick up office supplies, that's mileage you can deduct because you're going to do something for your business. You just need a log. We have a simple log we can share with you. It's just a Google sheet. You can make it up Excel if you'd like. That just allows you to say, when did I go? What did I do? You don't need screenshots of your odometer. You don't need receipts because you're not going to have a receipt from that. You don't need to print out MapQuest or Google Map directions. You just need to know what it is. So when I track mileage, if I forget to write one down and I know I went to, say, the UPS store to ship something, I can always go onto Google Maps and get the distance from my office to that location. Again, it's always going to be from you're tracking that mileage and put it in there. There's also a lot of software you can use. There's some free apps, a variety of apps. I have a list of them that I can share that will just kind of connect to your GPS basically and just let you check a box. Was this business, you can download it for the year. So that's actually a nice way to go. All of them have kind of upgraded options as well. There are 2 ways to deduct mileage on your tax return. This is something you're going to want to talk to an accountant about. Actual mileage versus percentage of overall miles driven. You still have to have a mileage log either way. And if you are doing percentage of overall miles driven, you need to know the starting odometer number for January 1st of the year you're doing your taxes. So January 1st, 2024 to the ending odometer for December 31st, 2024, if you're doing your percentage. So since you still have to have a log either way, actual mileage is often easier. Sometimes you get a slightly better deduction for per miles driven. That is an accounting question. We're just getting you started here. Oops. And then the other thing about vehicle deductions, and I don't have a slide about that, but you can deduct the expenses for your car, as I mentioned, like your gas or your oil changes, buying new tires, things like that. But only if you use the vehicle 50% or more for your business. So if you have less than 50%, you cannot take those deductions. That also includes interest on car loans if you're doing that. But again, you have to actually drive the car 50% of the time for your business. So the last slide is questions. So I'm going to stop share so I can actually see you in the audience. As a reminder, we are recording this, so we will share the video out, put it on our YouTube for the other literally 20 people who RSVP'd who are not here today. And we will send the slides as well. There's some live links in there just so you can review. And the last thing is SIMBA provides business consultations. I know everyone in the room has had a business consultation with me. So it's easy to sign up. You can find the link on our website. If you have our scheduling links, you can use that as well. Those meetings are currently free, so we are happy to write additional advice. We can help you with your state, B&O, and sales tax filings. We will not do actual help for your federal filings, but we will talk you through these sections and help you see if you're tracking it correctly, provide sample home leases, those kinds. So any questions? And if not, we got started at 12:30 or 12:08. And it's 12:38 now, so we got you in and out in 30 minutes. We haven't topic for business bites for April yet. We'll be in touch with that soon. Again, these are every month. They're 30 minutes. They're always recorded. They're always available on our YouTube if you miss them. And we always send out the slides after the fact. Thank you very much for your time. Have a great day.